It's Wednesday. It's a weekly webinar, 24th of April, 2024 Q2. Let's start. So, win a case study. And like I said, we've gone through many of these, and in the book, there are 10 baggers, and they've got 5 traits. And this one also fits those traits, or it did do. It's got a little too big now. But it's W7, or W7L, Warpaint London. They come out with final results, of course, today. And let's have a look at on the MicroCap League. So here we are. And as yet to see, I mean, it's not scoring at the top, it scores 65, because the potential now, I mean, even the broker targets there have only got a 70% upside target. But nevertheless, a cracking company, an amazing company. And this is the kind of things you're looking for. Let me just get rid of the toolbars here so give you more room on the screen, a little bit more. Look at this. 354 enterprise value, million that is. It was below the market cap, and there's more cash than debt. In fact, they've got no debt. There were a little bit of debt for the interims. They got rid of that, which is nice. Average daily volume's good. Operating profit, 18.4 million. Operating cash flow, 10.4. Now, of course, growth companies, you want growth. Look at the growth here. Half year, full year, all green on the screen. We scroll down. Oh, the value now has become a bit questionable. But nevertheless, it's a cracking company. It's a growing, even this, this last year, to 31st December, 40% top line growth. And interest 46. The second half wasn't as strong as the first. But nevertheless, look at all these metrics. Top scores on growth. That is the most essential metric for growth companies. Growth. It may seem obvious, but it's amazing how many times you can look at a company and overlook the growth and focus on something else. But that's why growth is up the top here, and it scores the most on the MicroCap League, because we're looking for growth companies. And like I said, all those other companies, 10 baggers, they all had growth. Health is very good. Efficiency, decent, 40%, just below 40% gross. But return on capital employed is excellent. Look at that. It's gone up from 26 interims to 36. So looking over 10. By the way, if you click these little icons, of course, it explains what all these metrics are. That's good. Momentum, top scores. The only thing that's letting it down is the value and the potential, because the brokers are giving it that. I give it a bit more than that. In fact, here's the figures. So from 64 million top line to 89. Look at the operating profit, 7.9 to 18. That is good, isn't it? Fair play. That's a good. Now, don't people let you tell you there's no good business on AIM. There are plenty of good businesses. Trouble is, all the crap, like the resource stocks, the pop and drop rubbish, is tarred with that brush. People want to get risks. And in fact, in the book, I explained the money isn't made in pop and drop stocks. You can trade them, you can make a quick buck, but it's a false economy. You largely lose more than you make. So anyway, scroll down here. It's all good. So these are all the broker forecasts and my margins, but I'm giving it quite a high rating on a multiple of 5 sales. Maybe you could bring that down, but even if you do, I still see upside here. By the way, there's a 12-month target, and this is obviously of 2 years. So I got 38% there. So I think it's still. I mean, it's running like crazy. It may come back a bit, but when it does come back, it tends to get bought up. That's the momentum. Look at that. Let me just get rid of that blue line. Look at that. Listen, it had a dip there for some reason. Went out 375, and in a few days up to almost 490. Excellent company. So this is the share price performance, okay? From a low of 35 pence on the 16th of April 2020, that was the COVID dash for cash crash, to 4.99, which hit today. That's 1,300%. That's a 10 bagger. In how many years? 4. I can do the maths there because we're in April now. 4. Okay, so no one buys the low, you're probably thinking. So let's look at that. Since the end of 2016, after the IPO, up to today, so it did float at 138, one about there, over a quid. So it's 258. But of course, they had COVID, and COVID affected them quite a bit. Looking back in it, in retrospect, that was an opportunity, because from the end of 2019, they got 598%. Let's look at growth. Like I said, growth is the most important thing, right? This is a spreadsheet I created today, and to put it all in, simplify it a bit. Revenue growth, 2006, this is since the IPO, 44, 45%, 49%. And then they had, what was it? They started having problems with COVID there, and so went down there and there. But every year, look at that, every single year, pretty much, apart from the COVID 2 years, we had problems there, and it started slowing down. They're above 20%. A lot of time, close to almost 40%. Growth is essential, for growth companies. And of course, if you're looking at ahead and you think growth is coming, that can be very dangerous. And I'll explain why in a bit. But of course, having reported growth is very important. And of course, the metrics on the MicroCap League, the major scorers are pretty much, growth and value, and the momentum is very important. And of course, there's health, efficiency, potential, but growth and value, you pair those together, and you've got something special. This company right now, you question the valuation. You think, okay, it's getting a little bit expensive, but let's look at the valuation. So this is the price to sales metric, okay? So when they started off, they floated. That's normal for companies that come to IPO. They try and get as much money as they can. They float a bit high. So 3.8 times, 4.9. But look at this. 2018, 2019, 2020, 2021, they're all below 3 times sales, which fits the other 10 baggers pretty much. And they all had growth as well. So the growth and value, okay? So there's plenty of time to get in there. And literally now it's 3.24. So it's getting back above that level. So we have to come back. But nevertheless, that's a lesson in these kind of stocks. They're very few and far between. But, you've got to make sure your antennas are up. When you see growth in a company like that, from a 20% consistently pretty much year on year, look at that. Okay, they may have some 1 or 2 off years. That was not down to them. That wasn't down to the business. And they've got value as well. There's a good chance it'll do well. They can, consistently do that. Okay. I've also put this a little bit in the book. Portfolio management security. Even if you make a mistake on your investments, your portfolio management can save you. So it's very important you have, a robust portfolio management strategy. And in fact, in the book there, I do go on about portfolio management quite a bit. And to take it seriously, it's the last line of defense. And in fact, I do put it at the top saying it's not talked about a lot, portfolio management, but it should be, the most important thing when it comes to investing, because it can save you, like I said. It's the how. So the what, the when, the how of my third level of security was important though. So how to buy there. So I've said before, you have no control. And I'll give you a real life example here. No control over management or operations, but you do have control over how much you invest in a company. Okay, and that's what you have control of, your exposure. Portfolio management falls within your circle of control and can influence the result rather than the result itself. It's like trying to build a house with no plans, without any plans. Probably the most important part about investing. Here's a real life example. You may know a month back, I dipped my toe into SRT Marine for all the wrong reasons. It's amazing having rules. Having rules is one thing, sticking to them is another thing. And in fact, it's good to have a small mistake now and again because you go back on track. But keep them small, That's the thing. If you make mistakes, we all make mistakes. Everyone's going to make mistakes. You'd be a robot otherwise. You'd be AI driven. In fact, the AI make mistakes anyway. So look at this. They had no growth. The most recent set of interim results showed no growth. They also pushed out their year-end reporting date by 6 months to include these big orders that were apparently incoming. Okay? So that's a red flag. It really is. No value. The value was not compelling on the current figures. There would have been more compelling on the, and I've written a blog about this when I sold this, by the way. Was it yesterday? Yesterday there was, yeah. There would have been, more compelling on forecasted figures. But those are just forecasts. Pretty much, it's like saying, what's the weather going to be like in 2 weeks' time? You don't really know. You can roughly guess. 7-day forecast is accurate. It's going out, but you don't really know. And there's no momentum. There was absolutely no momentum. So on the 3 major metrics, MicroCap League has scored on, it missed on all of those, and the momentum was. So you're probably thinking, and I am now, why did you invest? Well, this is the thing, and this is tied in with, risk management, portfolio management. I invested on the hope that these big orders would happen, but there's no guarantee of that, of course. Hope is not an investment strategy. It's not at all. You're better off investing in the figures that are actually real than figures that are not real, hopefully coming. The broker had excellent growth forecast. from already received orders, and their target price was 300% above its current price. So I focus on the reward, not the risk. There's no point doing that. When you invest in a company, there's no reward. There's just risk. It's your money in a company. When you get in a bit of reward, when you start getting the profit, then you start to manage the reward as well. But first and foremost, it's risk. Think, how much can I lose in the stock? And then that'll temper your sort of enthusiasm for how much am I going to make in this and make me rich. Because when you think that, you think, if I put 10 times more money into this, I'll be 10 times as rich. But you can be 10 times as poor. And that's likely to happen. So focus on the risk first. And then, go small. When the winners start playing out, then you can start averaging up. But the only aspect this investment got right was portfolio management. That's the only thing I did right here. Everything else got wrong. So I only invested 1% of my total portfolio value and put a stop loss 20% below my buying price. So on Tuesday, the volume was twice that, the average daily volume, right? And the share price started dropping. I thought, what the heck is going on? So I checked its RNS feed and all that stuff. There's no news. After about 10%, I was already down 10%, my stop loss just kicked in and got me out of there. So I lost 20% of 1% of my total, which is about 0.08%, nothing. So I kept my loss small. The share price dropped even further during yesterday. I ended up like 19, 20% down. And I couldn't understand, the volume again was big. In fact, today this morning, the share price dropped again by 10%. In fact, where is it now? Let's have a look. SRT. I don't know where it dropped by this morning, but look at that. I'll get my bald head out the way. I can't see. I was down by 4% today. It was down by literally at one point. I think it went down at 18%. So at 9:48 this morning, the company released news entitled "Response to Reports in the Philippines Press," where Philippines press. I don't know about you. I don't even read the British press, let alone the Philippines press. What the heck's going on there? But obviously someone picked up on it because the volume was going through this. I think it was triple the volume at the end of the day. They say SRT notes the recent share price movement and the reporting in the Philippines press with regards to the IMEMS fisheries project. SRT wishes to clarify that the IMEMS contract was won following a competitive international tender, which had been successfully implemented and is operational. I don't know if you read about it. I did try and read about it, but apparently it should have gone to a French company, or I don't know, and it was being a loan to the Philippines, and this normally happens. So a loan from a lot of their contracts, by the way, is a British loan to the country to set the contract with Britain. But this apparently is a French loan, but it has to be a French company. So I don't know what happened. Anyway, so they say, on Monday, the Ombudsman confirmed that both SRT and Richard Hurd are cleared, but has recommended further investigation into Simon Tucker, that's the CEO, and other individuals outside SRT. The board is fully supportive of Simon, who is now working to clear his name. Simon doesn't own many shares in the company, by the way. I looked at that. We looked at that a while back. This is exactly the kind of scenario. In fact, I wrote a made-up scenario like this in the book, and I put this in as an example now. And there's also another example, I don't know, of CTL recently, where the CEO was loaning stock to a third party, and the board didn't know anything about this. So these left field sort of, black swan events can happen, and you can't do anything about that. You know nothing about that. So the only thing you can do is have a bit of portfolio management in place, and that will protect you against these unforeseen, because the things you normally worry about, like revenue generation, sales and all that, but you can pretty much see that happening, but these kind of things you can't. So it's just in case that happens, anyway, so even if you make mistakes there in investment, your portfolio management can save you, and you will make mistakes all the time, but as long as you get portfolio management in there and you don't go too big, and maybe you stop loss. I mean, you can do either. If you don't go too big, it doesn't sort of matter anyway. I mean, if they do land contracts, going forward, this may shoot up again, but who knows? But like I say, don't go too big, first and foremost, on a company if you're not sure about it. And I wasn't particularly sure about it. It didn't have growth value or momentum. I'm just tempted by the reward. That's really amateur. Anyway, there we are. Okay. Let's have a look at chat. I was hoping to be taken out by one of the big luxury good companies. W7, WF7, yeah. You're always breaking your rules. You can't go through if there's no hope for us. Yeah. No, Rob, I didn't break my rule. I broke my rule on, like I said, portfolio management is not, is the most important rule, first of all. I mean, stock selecting, yes. I mean, I will pick companies and not literally, as I said, there's a difference between performers and recoveries, and recoveries are very, very risky, but huge upside. And if you get it right, but that's why you go small on them, so yeah, well, yeah, absolutely. Sticking to rules is the hardest thing. Making rules is very easy indeed, and you know the right rules. But we are emotional beings, humans, and once you conquer that, by the way, once you can conquer that emotional side of it, you can be the best investor in the world. And in fact, I cover that in the book, and I say what separates average investors from exceptional ones is emotions. Full stop. And if you conquer that, you'll be the best in the world. That's the hardest thing in the world to do. It's not reading, and I point this out many times, it's not reading financial reports, it's not reading balance sheets, it's not reading charts. The hardest thing in the world is controlling your mind. And that's it, your emotions. So once you got that, and even if you're, and it's not a black or white thing, it's like literally you can be, spot on with many of your sort of stock selections and be very disciplined, and then you can just go off piste, and in the skiing terms, like I say, 99% of the time you can go down a nice run that's mowed out nicely for you, and then every now and again you go, I'll try it off piste, and you break your leg. You say, oh, I won't do that again. So it's good to have, it's good to make mistakes because it reminds you a little bit. But keep mistakes thing. But emotions are the thing to conquer above everything else. And I put that at the top of the book, actually, saying, the rules are here. You probably won't stick to them because I haven't many times. But if you can, you'll be an exceptional investor.